Hello, guys. So today we are with Kian Zhu, who is the founder of Cryptoquant. It's a company which provides on-chain and data analytics tools for crypto markets. Great to have you here, Ki, today.
Thanks for having me, Anna.
So can you tell us how you got into crypto? What was the year when you first heard about it?
Sure. I got into this industry back in 2016. I was trading crypto derivatives on BMX futures trading, and I got so much money. I earned um, like a million from like 10,000. So I was very
Wow, that's
happy.
pretty nice.
Yeah, pretty nice. Like it's like 100x, 1000x, whatever, right? And like I felt I'm so confident at futures trading. I was like I felt like a futures god, but like I got liquidated, so I lost everything and like been investing crypto Bitcoin futures for about like 3 years, and I got liquidated 100 times, and I realized that I think there should be there was supposed to be some kind of evidences and fundamentals for my investment framework. So I think blockchain data could be the next thing, just like traditional assets. Um, it's by just looking at blockchain data, we can figure out how the digital assets are undervalued, and we can find some event-driven and a lot of investment strategies from that data. So um, I was working at a web security company in Asia as a product manager. I learned cryptography and all the stuff back then, and I quit the job in 2018 and then started this business since then. And the first business item was anti-money laundering solution, just like chain analysis. So we've been closely working with Korean police, Korean prosecution services, and we've solved a lot of money laundering cases, including the biggest sexual harassment, sexual abuse for children cases in Korea. So
Oh, wow.
yeah, that was so bad. Like it was like crazy. So, but they didn't pay us. I mean, the Korean government, they didn't pay us for the solution. So we had to pivot our business model to blockchain data provider for institutional investors. So in 2019, we launched our minimum viable product, and we got some attentions from our institutional clients. But back then, no institutions there's no large institutions who are joining crypto investment like heavily. Fidelity was there, but like they're not investment wise, they're not active. Some of the arbitrage, high frequency trading firms are there, but fundamental who like event-driven hedge funds like who are utilize event-driven strategies and fundamental analysis, there wasn't in they didn't join. So since mid 2020, we've been seeing a lot of hedge funds, quant fund firms, and even venture funds. They're trying to evaluate digital assets in the secondary markets. So since 2020, we got a decent traffic. We from like B2B side and B2C side as well. So for now, I my dream is to build a new innovative investment framework for digital assets. For now, people are just like investing in crypto without any evidences. I mean, like any data-driven strategies. I haven't found, um, you know, retail investors and even like institutional investors. They're um, make investment decisions with some um, event-driven strategies, like Fed chairman said something like that. Uh, and Ukraine war could affect Bitcoin markets, and that's it. There's no insights from data. So I think not only just data provider, but also as an analyst, I think I can make a investment um, framework for TradFi institutions, and eventually we can help them to adopt digital assets on their side.
So who are your current clients? Are these more institutional clients, or do you have as well retail clients too?
We have pretty big names, but I cannot tell you because of our NDA. So you might think about you can think the biggest quantitative hedge firms around the world and the biggest bank around the world. So they're our client in the Wall
That's
Street.
pretty that's pretty
Yeah, it's
big.
pretty clear.
Interesting. And as
Yeah.
well, we soon will have Ethereum merge, and let's talk more about what on-chain data says about movement of Ethereum. Now, like we see a lot of people try to benefit from Ethereum merge, and some people are waiting for the airdrop of Ethereum proof of work tokens. So what data do you see? Do you see withdrawals from DeFi protocols to invest more into Ethereum?
There's a there's a data called Ethereum staking inflows for ETH 2.0 contracts. So if you calculate the realized price for these uh, depositing transactions for ETH 2.0, you can get their price expectations. So when if you deposit like 100 Ethereum when Ethereum was $1,000, you think, okay, Ethereum can go up from $1,000, right? So if you aggregate all these transactions and get get their entry price for ETH 2.0 contract, you'll get like $1,200, around $1,200. So I think Ethereum, what's the Ethereum price for now?
It's around 1,500 or something.
$1,500, right? So I've been insisting like Ethereum cannot. I mean, it's unlikely to go below 100 $1,100 because of this assumption. So like for now, I think I don't know. A lot of factors can affect Ethereum markets, even Bitcoin, because um, some Mt. Gox related wallets, including criminals, Bitcoin hasn't moved for like over like 7 years. It's moving, so including some of the well-known famous people in crypto, then they're selling. So it could affect Ethereum merge and all the stuff as well. So for the macro side, like macro here indicates Bitcoin markets is not that good, I think. But Ethereum merge itself is pretty bullish because, like I said, we are not far from the strongest support level, $1,200, which is and at the end the realized price for Ethereum 2.0 contract deposit contracts. Yeah, and I have some of the other stuff for Ethereum merge. You might want to look at the profile for the who deposited into E 2.0 contract, their profiles, right? Obviously, some of them they're running bots to deposit transactions. It's pretty clear. But if you look at like a granular level, um, not just like aggregating all the depositing data, you will get like, not sure the number, what number is for now, but like a few months ago, it was like 70% of depositor was um, singular entities. Like what I'm saying is like retention rate is very high. So there is no new entrants for ETH 2.0 depositing contracts. So I think ETH believers who deposited ETH 2.0 like the beginning of this year and the end of last year, they are depositing again and again, and like no significant new entrants for ETH 2.0 depositors for now. This is outdated, so it could be different. It could show different data for now, but like, yeah.
So as I understand, you still see the market currently pretty bearish, right?
Pretty bearish or going sideways, even if we have ETH merge.
So which indicators do you use?
You mean the evidences? I mean, what's the
Yeah,
backup
like
data?
which on-chain data and etc. You mentioned that like some big whales moving their bitcoins and other crypto. So can you tell more about that?
So if it's more like crypto is all about narratives, right? Including financial assets. But you know, the strongest narrative for Bitcoin was institutional adoptions for companies and conglomerates, and we have financial institutions adoptions ahead for the next few years. But for Ethereum, merge is the biggest narrative, I think, for now. But if the narrative believer for merge, Ethereum merge is like huge. There's gonna be some new entrants, and you know, joining this the ETH 2.0 deposit contracts, and you know, a lot of people should deposit a lot of Ethereum on ETH 2.0 deposit contracts, right? And if it's like just, you know, if you want to take an advantage from just event-driven strategies, you should just buy Ethereum, right? So these type of accumulation activities should be shown throughout our data. For example, markets data. There are data called take or buy volume. Take or buy volume is the buying volume via market order, not limit order. So you just buy Ethereum like this much, not like you you're buying like Ethereum this level. So what it means that it includes long squeeze, long liquidations and short liquidations. So I exclude long or short liquidations from take or buy or sell volume. And so take or buy volume minus, short liquidations could indicate pure buying volume, right? Through via market order. And there's no accumulations from, who are buying Ethereum through market orders for now. And I think I haven't seen any significant premiums on Coinbase and other exchanges as well. And this is, like I said, this is a few months, a month outdated. So I need to look at the data for this month as well, for August as well. But at the end of July, there wasn't any significant whale accumulation from Ethereum side. So I think, and on-chain data, like I said, ETH 2.0 depositing contracts, depositing activities, as well as their depositors' profiles, and maybe we can use, some of the granular level data. There's a MVRV data. Have you heard of it? MVRV?
No, I haven't heard.
MVRV is realized market cap divided by total market cap. And normally we calculate total market cap, just, coin supply multiplies coins price, right? But there are lost coins, that cannot access, or like governments hold the coins, just like Mt. Gox, So you might want to calculate, exclude those coins, right? So if you like to weight these coins, you have to calculate when the coin moves. If Bitcoin moved like 10,000 back in 2013, you just calculate the supply like 10,000 Bitcoins multiply $100, something like that, and you'll get like actual, like real, we call it realized supply or realized capitalization. So anyways, MVRV is like the average PNL for all the blockchain wallets. So for Bitcoin, there's nothing much you can do with Bitcoin, right? So MVRV is one of the promising indicators for on-chain data. So when MVRV hits like 3.7, that means all average PNL for all blockchain wallets is 270%. So normally like this much PNL, it indicates the market cyclic tops, and when it goes below 1, it means all average PNL for all the blockchain wallets is underwater. So it could be undervalued, right? But for Ethereum, it's like there's so many use cases when you move Ethereum, right? So you might think of some of the granular level MVRV, exclude all the transactions. I mean, just include transactions which can be considered as selling activities. For example, DEX transactions, or sending Ethereum to centralized exchanges. If you just count these transactions and get MVRV, you will get some signals for selling and buying activities for Ethereum. I can show you some charts, but like this is for our institutional investors. So I'm just saying, like a month ago, there wasn't any accumulation activities from.
What are the best strategies during such bear market as now?
So in bear market, I think there are two types of bear markets. For one, bear market with no liquidity, and bear market with liquidity. So for future, if you're futures traders, this is not a time, I guess, because liquidity is very low, and price movement itself is like not it's like unpredictable a lot. So a lot of technical analysts, they're like losing their money in this low liquidity bear markets. And I think it's time to accumulate with DCA approach, I guess, because it's pretty obvious that for the next few years, some of the big institutions like BlackRock, Goldman Sachs, Fidelity, they're joining, this industry. Like a month ago, BlackRock, a few months ago, BlackRock, they invested in USDC reserve. Like it was $400 million for the entire round. What it means that they're investing in stablecoins, and then they're gonna do something with their stablecoin reserve, USDC, maybe highly likely investing in DeFi and all the other coins, or just buy Bitcoin. So I think it's a bullish thing in the long term. And Fed chairman, he said stablecoins and CBDC can coexist, which means the U.S. government is kind of allows financial institutions to invest in stablecoins, and in order to make stablecoins markets bigger, they have to invest in at least Bitcoin or DeFi, right? So it helps to improve. I mean, like helps to make digital dollars. I mean, the stablecoins dollar supremacy bigger around the world. So I think it's pretty obvious the market is gonna bullish for the next few years, but it's not gonna be in a short term. So I think till at the end of this year, the market is going sideways or bearish, and once institutional adoptions, like they start to buy something with their stable coins, I guess that's the starting points for the next bull market.
So in your opinion, the catalyst for the next bull market will be big institutional adoption?
Yes. Last year it was just companies, I like MicroStrategy, Tesla, but this time it's like financial institutions, BlackRock, Goldman Sachs. It's like another level, I guess.